So, Rusty, tell us about your Gascoyne position and why you like the stock.
Yeah, sure. Thanks for having me, guys. We've followed this story for a long time. It's had a interesting journey, no question there. But yeah, it's a significant position for us. It's one of our larger positions in the fund. Certainly our largest gold position at present. And I think, as we've talked about previously, I think there's real potential for this to be the pick of diggers in our view. I guess just a few key points as to why we like it, and starting with just underwritten value. This is something we look at quite a lot with companies. Oftentimes with sort of exciting exploration plays, you don't get this, but in this instance, you have a 2.5 million ton per annum mill there, fully permitted, prior operation, and that mill, from memory, I think it's built by GRs. I think it was a pretty high spec bit of kit. So at today's market cap of 160 odd million, correct me if I'm wrong, but you're almost underwritten just with the mill replacement value given the inflationary environment. Perhaps a scratch more, but it's significant underwriting to the value from the mill value alone. And then a lot of leverage that comes from that mill. And we've had investments previously. We really like these plays where, and I think you'll find like Northern Star and Saracen largely built upon buying milling infrastructure, undervalued, unloved milling infrastructure out of majors. This is a little bit different, but I'd argue, again, undervalued, unloved milling infrastructure here. And that provides just a huge amount of leverage to discovery, because you don't have that massive capex hurdle that all the exploration and development codes eventually have to address when they're bringing their discoveries through to operations. So I think sometimes the market misses this leverage to discovery, and that's been a big part of the thesis for us and why we've been happy to get around it. And the company's been pretty clear about a lot of the work they're doing now on various studies, including flexibility on downshifting the mill throughput. So, I think in the past, perhaps some criticism's been around, the mill's a bit big at 2.5 million ton per annum. It looks like there's some good potential to downshift that back towards, say, 1.5 million ton per annum, still have a reasonably competitive cost profile associated with that throughput. So the company's doing the work there, but that flexibility to downshift the mill is important. And then this all ties into why I think the market will pay a lot more attention to this company, and that's around the Never Never discovery. That discovery's got a lot of potential to significantly lift the grade profile of throughput when they look to turn the operations back on. And we see a lot of potential for repetitions of that ore body as well. So it's a new mineralization style. It's not associated with the sort of historical deposit that the company has, the lower grade historical deposit. And so we see potential for growth there. It's at good grade, and additionally potential for repetitions. And there's plenty of water to go under the bridge. Company's got plenty of work still to do, but they're very well funded to do that. So that's it in a nutshell for us.